no hay ninguna ambigüedad al respecto.
Está con nosotros desde Estados Unidos Lance Roberts, es el jefe de estrategia de Ria Advisors, de Ria Advisors. Lance Roberts, good night for us, good afternoon for you.
Yes.
What do you think about these words about inflation, this high inflation, and this movement of 75 point basics today? What's your opinion about Powell and his words in this statement?
Well, what he said today was basically a reiteration of what he said back in late August in the Jackson Hole Summit. It was interesting, just prior to him at Jackson Hole, he had a whole nother speech prepared. And just before he gave his speech, he basically tore it up, wrote a very short comment because markets were accelerating higher on the assumption that the Fed was going to pivot and not be as aggressive as the Fed had been alluding to. And he came out with a very stern statement to the markets at Jackson Hole, said, hey, look, we're going to hike rates until we get inflation under control. And if you listen to his speech today, basically saying exactly the same thing, the 75 basis point rate hike, very well expected. 2 more 50 basis point hikes through the rest of this year, 2 more meetings at 50 basis points each. That's going to get them towards what they call the terminal rate or the neutral rate for the economy. That's the point where they expect the economy will start to show the impacts of these rate hikes and slow down meaningfully. And that's what Jerome Powell's alluding to. He's saying, look, be prepared for lower below trend growth in the economy, be prepared for weaker employment. That's what we have to do in order to get inflation down. And he's okay with that. That also means lower market prices.
And why the stocks received this news as a good news 30 minutes ago?
Well, it's interesting. Initially, the market sold off, but then rallied back after that because, again, at this point right now, what the Fed is saying is pretty much what the market is saying is priced into the markets, right? So the Fed came out pretty much in line, said exactly kind of what markets were expecting them to say. So markets are saying, okay, we've had this big sell-off this year. We've had a big sell-off over the last couple of weeks. This news was priced into the market, so being a bit of a rally here, not surprising. The important thing to consider, though, is it's not just the Federal Reserve hiking interest rates. 40% of corporate profits come from international countries in the U.S. Corporate profits are at a record high right now. Those margins at record highs. Europe is dealing with a massive energy crisis right now. They're dealing with the impacts of high inflation as well. The central banks and the European Central Bank and others are all hiking interest rates. This is going to create more of a global demand destruction, not just domestically here in the U.S. This is going to start to slow the economy down, I suspect more than even what the Fed thinks. So as we get into next year, we could see the markets start to underperform a bit here because of weaker than expected earnings growth, collapsing profit margins because of high inflation, because of what's happening internationally, as much as is happening in the U.S. now.
Are you more scared about now from inflation or for growth?
Well, look, growth is going to be, slow. And again, already here in the United States, we're looking at very slow growth, 2 negative quarters in a row to begin this year. Right now, Q3 estimates are at 0.3%, so barely in positive territory. I suspect next year that we're going to see a recession in the U.S. because of higher interest rates, right? Again, the Fed has just said, we want to slow economic growth. Very clear about that message. Well, the economy is barely above zero at this point right now. So most likely next year, we're going to see a recession. So that's really what I'm more worried about right now. Inflation is going to come down on its own. Let's not forget where this inflation came from. This was because of all that liquidity that was sent into households, checks to households at a time that we shut down the global economy. So money into households is demand. Shut down the economy is a lack of supply. You get inflation. That is reversing itself. So inflation is going to come down by itself, but now we're going to speed up that process through higher rates. That really puts the economy at risk.
The U.S. are now in a recession?
No, not yet. We will probably see that next year in 2023.
Thank you very much, Lance Robert, Jefe de Estrategia de Real Investment Advice. Good night, good afternoon, good business, Lance.
Thank you. Bye.
Volvemos a ver a Powell. Tenemos además con nosotros ya para acompañar